Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 7th through July 12th, where if you'll stick around to the end, we'll share with you how you can declare your financial independence. So we'll go through our normal market analysis, talk about trade ideas, trade strategies for the trading week of July 8th through July 12th. And then again, at the end, we'll share with you our thoughts on how you can declare your financial independence. So let's get started. Welcome, Ellen Krantz, Fairchild. Thank you for joining us in the chat today. Hope you all are doing well. So here's our notes for our weekly trading game plan for part one for the trading week of July 8th through July 12th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trade ideas, trade strategies, etc. We keep all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to that Google Drive folder in the description box below. So firstly, we'll go through our market analysis for last week, kind of a on and off shortened week with the Independence Day holiday and the shortened day on Wednesday. So we'll see how the markets ended up on Friday. And we'll see all the markets were up. We got some exuberant reactions, as we'll see, to the employment data came out Friday. And again, we see the momentum in the Magnificent Seven continues as we've been discussing. So all of the indices were up. Dow only slightly up 0.17, NASDAQ up 0.9, almost up 1%, and the S&P up 0.54%. Although we see a pretty split between advancers and decliners, so 52% advancers, 44% decliners. We got 78% new highs, 21% new lows. Again, we're pretty split across the 50-day moving average, so we've got 50% above, 50% about, 50% below, and we've got about a 60-40 split above the 200-day, 62% above, 37% below. So although all the indices were all up, we see it was pretty mixed. Again, in my humble opinion, the indices are all being driven by the Magnificent Seven. And as we've been discussing, the Magnificent Seven momentum continues. So again, we'll see that in further analysis as well. Welcome, Nagam, the Ricky Khan. Thank you all for joining us today. If we look at some of the news, so S&P hit record high, payroll data raises rate cut hopes, S&P scores record high, jobs data point to cooling but not collapsing economy, record run after jobs report, high price S&P powers ahead, record close on Friday. So again, all driven by the positive jobs report that we'll look at and the supposition that rate cuts might be coming due to the increasing unemployment. So if we look at oil is bounced off that 85 resistance level, got support at 80, so it's testing that 85 resistance level. We'll see we had a significant breakdown in natural gas down below 250. We'll see if we get a test in the low twos or a 2. Gold surged up over 2,400 briefly. It's testing that resistance level at 2,400. We'll also see silver had a similar surge. We can see all the indices are currently pointing up with the exception of the Russell, which spiked and now is pointing slightly down. Japanese yen continues to be weak, and we'll see a surge in the Nikkei index based on that. Earlier in the week, we had seen the Treasuries 30-year was up over 4.6. Later in the week, when we got the ADP data and then the non-farm payroll data, we had a significant drop in bond yields, pop up in bond prices we'll see in the futures. So now the bonds are down below 4.5 again, and we'll see that recovery in bond prices. Bitcoin had dropped off below 60K, a little bit of an increase now there. So we'll look at a breakdown of the major indices and then the technology components within the indices, or essentially within the Qs. Just a quick reminder, you can find these direct links in our notes documents and also in the screener sheet in both of our ETFs and our Watchlist Google Sheets. So a good way to watch the indices and the technology components during the day. So we see, even though the Dow was up slightly on Friday, it's been, trading pretty flat following that lower trend line. Got a double top around 400. So again, the Dow not really, it's trading laterally sideways, even though it was slightly up on Friday. Similarly, IWM not really participating as strongly. It's kind of chopping around that lower trend line, right around the moving average. So again, pretty much trading laterally. So again, Dow, IWM not really participating. Q and the SPYs driven, again, in my humble opinion, by mostly the Magnificent Seven momentum. So we see the Qs, NASDAQ broke out above that upper trend line, made a new all-time high. Again, plenty of strength in the Qs. Again, my humble opinion, driven just by the Magnificent Seven, and less so, but similarly, the S&P 500. So again, it's traveling more in the middle of its channel, but again, mostly the Magnificent Seven momentum. And we'll see that in a breakdown of the technology components. Welcome, Logan Flips, if I missed you earlier. Thank you for joining us. Hope you're doing well. Hope everybody had a great 4th of July holiday, safe and great Independence Day, 4th of July holiday. So here's the breakdown of the technology components. Again, these are all the leveraged long ETFs that we use to track the various technology components. Again, you can clearly see the Magnificent Seven momentum in FANG-U. So it broke out a very exuberant run, broke out of its trend line, upper channel. So it's on a strong, exuberant run. We'll see if that momentum continues. We have seen some oscillations, some profit taking in the Magnificent Seven, but the buy the dippers are pretty relentless, and they're driving, the Magnificent Seven to new highs. See, ARK-K had a little bit of a recovery, but again, still not really participating in the exuberant run. So it did have a little bit of a pop up to its moving average. Probably the recovery in Tesla prices, although I did see that Cathie Wood was selling off some of the Tesla. So again, ARK-K not really participating. Semiconductors, again, mostly NVIDIA driven, but again, not participating as strongly. Biotech not really participating at all. We're getting this narrowing wedge. So it's sitting at its moving average, resistance from the upper trend line, support from the lower trend line. At some point we might see a breakdown, or potentially a break up if we see some rotation into biotechs. Talked about the Qs, breakout above the upper trend line, exuberant run. Broader technology similarly, but not quite as strong. Again, TECL does contain several of the Magnificent Seven. So again, that momentum will drive up TECL, but it is a little bit broader than, say, FANG-U, etc. So I hope that all helps. So next, let me grab a quick drink and we'll go through the groups, sectors, industries. Good morning, Carmen. Thank you for joining us. Hope you're doing well. So if we look at a breakdown of the sectors, the groups, in the groups tab in FinViz, see again, Friday, communication services, so Amazon, several of your Mag 7s, again, technology. Healthcare did have a little bit of a recovery, but in general, healthcare has been somewhat weak. Also, consumer defensives had a little bit of a recovery. The weakest sector's energy, surprisingly, given oil up testing 85, and financials and industrials. So again, we're seeing, I think, some rotation out of financials and industrials. Real estate, a recovery due to the decreasing bond yields, decreasing mortgage rates related around that. So for the week, again, strongest, Mag 7, technology, communication services. We had consumer cyclicals. We'll see a recovery in gold, silver, so basic materials. Financials generally strong. So again, Friday, some probably profit-taking rotation out of financials. Energy, slightly positive for the week. Real estate, slightly positive. Industrials weak. And again, healthcare for the week was weak, but we got a little bit of a bounce on Friday. So far this month, again, all Mag 7, some consumer cyclical, some energy, financials, a little positive, and the weakest utilities. So thus far, we haven't seen that rotation out of the Mag 7. And again, there's no reason to believe that we will anytime soon. Just see some profit taking. Again, a lot of FOMO, a lot of AI FOMO, a lot of momentum in the Mag 7. So if we look at a breakdown of the industries, again, we see that recovery, that swing back up in gold and silver. We'll see, we saw that breakout in gold up over 3,400 briefly, testing that resistance. We'll see silvers up in the 31s. So some basic materials, some of the REITs benefited from that decrease in bond yields. Weakest sectors, some REITs didn't participate, oil and gas, again, energy, probably some profit taking. We did see a little bit of a decrease in oil prices. Coal, so again, energy, solar, been very volatile, again, tends to be very volatile. So for the week, basic materials, gold and silver, copper, we'll see a recovery in copper. Coal was positive for the week. Some REITs, again, positive. Steel recovery. Some REITs, residential retail, negative. Solar, negative for the week. Uranium was negative. Again, we've been watching uranium, looking for some opportunities as it looks like it rolled over. And again, we're looking for some individual stocks. We talked about that last week, so I'm watching URLY. Look for an opportunity there. So again, sector we're watching for entry points in some of the individual stocks. Again, gold, copper, positive for the month. Some REITs negative for the month. Again, solar negative for the month. Uranium negative. So again, we're waiting for good opportunities in uranium. Okay, now we'll go through the economic data from last week. I'll go over some of the highlights in my notes, and then we'll look at the rest of the calendar from last week and also the upcoming calendar for the upcoming week. Just a quick reminder, as the important economic data and news comes out, I try to post this as quickly as possible in the Surf the Markets channel in our Discord. Again, our Discord is free to join. You can find a free invite to our Discord in the description box below. Again, as soon as I can, as this data comes out, I try to post the snapshot from investing.com, the raw data, etc. Also, any additional news related to the markets, I'll try to post that as quickly as possible in the Surf the Markets channel in our Discord. Again, our Discord's free to join. We'd love to have you join and participate in our Discord. So we didn't have a lot of news Monday, Tuesday. Again, Wednesday was a short trading week. Markets closed at 1. So again, hopefully you enjoyed your long holiday observance of Independence Day on Thursday the 4th. So we see mortgage rates did bounce back up over 7. Applications are down. Again, we'll see probably some little bit of recovery in that with the drop in bond yields. This is interesting. Wednesday we got ADP data, and the employment change was less than expected, so fewer added jobs in June from the ADP data. But then on Friday, we'll see there was more than expected jobs added. So a discrepancy between the ADP data and the non-farm payrolls that we saw also last month. Job cuts, less than expected, positive for the year. So there are reducing jobs, although we also saw the JOLTS data. There's still an unbalance between open jobs and people seeking jobs. I think the ratio is about 1.2 right now. We got initial jobless claims, again, a little higher than expected. Continuing claims, a little higher than expected. So again, getting some discrepancy between some of the ADP data and the non-farm data. So a few more people out of work, taking a little longer to find jobs, but again, not dramatic. So no reason for the Fed to move imminently. And Thursday was Independence Day. Again, hopefully you all had a great, safe, and enjoyable 4th of July. And again, Friday we got non-farm payrolls. So the overall payrolls was better than expected. So again, discrepancy with the ADP data. The unemployment rate did tick up a little bit to 4.1%. So again, that caused the speculation that the Fed might start cutting sooner rather than later. My humble opinion, I don't think they're going to cut anytime soon. But again, I believe that was part of the basis for the exuberant surge in the markets on Friday. Again, just a quick reminder, all of this is my opinions. None of this is financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. Also thought this was a little interesting that government payrolls was much higher than previous, but manufacturing was down. So again, we see continuing weakening in manufacturing, more strength in government and also in services. Participation rate was pretty steady. I think 62%. So not a lot of change in participation either. So if we look at the rest of the economic data from last week, so we got crude oil inventories, manufacturing, again, weaker than expected, construction spending down, again, ISM manufacturing, in contraction below 50, so again, manufacturing weakening. Bill auctions okay, a little weak. Again, JOLTS data higher than expected, so more open jobs, higher ratio of open jobs to people looking. So again, some discrepancy in some of the data that we're seeing. Talked about mortgage rates, and job cuts, and ADP. Global services PMI, a little better than expected. So again, services a little stronger than, say, manufacturing. Factory orders negative. So again, manufacturing, non-manufacturing business activity down below 50. So again, low slowing of the economy, but pretty gradual. Natural gas storage up positive, more than expected. So again, that might attribute part to the decline in natural gas prices that we saw. I didn't see anything interesting coming out of the FOMC meeting. No minutes, again, don't expect to hear anything other than what we've already heard. They need more data. Again, we've got all the Fed officials talking. They need more data, wait and see, Talked about unemployment. Baker Hughes, steady, up a little bit on total rig counts, stable on oil rig counts. So again, holding the oil prices up now between 80 and 85. So let's see what data we've got coming up for next week. Oh, not a whole lot. Monday, Tuesday, small business, more Fed officials talking. We've got Powell's testimony before the House and the Senate. So Tuesday and Wednesday, we've got Powell testifying. Again, I expect, them to be pressuring him for rate cuts. I think he'll hold the line, say they need to fight inflation. So again, a lot of political pressure, etc. But again, I don't expect any changes in tone coming out of those. But again, people will be listening to these Powell testimonies to see if they can get some hint as to when are they going to cut, how fast are they going to cut, etc. Again, I don't expect anything, and I think he will hold firm on their apolitical stance as well. So we get mortgages on Wednesday. We're Fed officials. Thursday we get CPI. So Thursday will be very important. This is inflation for June. Again, if this comes out hotter than expected, very negative for the markets. Lighter than expected, expect more exuberant runs. Also, we get jobless data, natural gas storage. Friday, we get PPI, so we get consumer on Thursday, supplier on Friday, and we also get Michigan sentiment data. So Thursday, Friday, again, it'll be a volatile week with the Powell testimonies Tuesday, Wednesday. Then Thursday, Friday, we get inflation data. So plenty of data to hopefully cause some potential volatility this week. So keep an eye on the economic calendar and how that might affect your trading. So we'll briefly look at the earnings calendar as well. Let me grab a quick drink and we'll spin through the earnings calendar. Actually, I can do that real quickly because I know we're starting up in earnings. I believe the financials start on Friday. So we're just starting the next earnings season. So pretty light. PepsiCo on Thursday. So consumers, consumer sector, ConAgra, some gold. So again, just starting up into the next earnings season. And then Friday, the big day, for the start of the financials, we get JP Morgan, Wells Fargo, Bank of New York Mellon. So again, watch, if their guidance is less than expected, that might cause a drop in financial sector, Citigroup. So again, watch the financial sector starting on Friday. Again, if they come out with better than expected earnings and guidance, might cause a pop recovery in the financial sector. And then again, we'll start up into a whole other earnings season starting the following week. So again, you can hear, our strategies for how to make money trading around earnings, and earnings are definitely going to matter. Also, guidance going forward. Did we already achieve peak earnings? And are they going to be declining going into the end of the month or end of the year? I think that'll be important to listen for. We don't get the next FOMC meeting till July 30, 31, end of the month. And again, we don't get a dot plot, an SCP this month. And again, my humble opinion, I don't expect any changes in July. Welcome, MD. Glad to see you in the chat today. Hope you all are doing well. So let me grab a drink and then we'll go over the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're currently offering a number of offers and promotions. If you open and fund an account, if you transfer investments, they're offering now a 2% cash bonus for transfers. If you open and fund your account with 25K or more, you also get 75 free fractional shares of stock. Below 25K, you get 20 free fractional shares, each worth like $300 to $3,000. And if you move your IRA to Webull, you get a 3.5% bonus on transfers and new contributions to your IRA. So we use Webull for our market analysis, our due diligence, the majority of our trading. And if you'd use our affiliate link in the description box below, you can get all of these bonuses now and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen and the online browser version of Webull. So here we can see a histogram of the distribution of advancers and decliners. So again, although we saw both the SPY and NASDAQ had pretty significant increases on Friday, the percent and the number of advancers was relatively small, actually fewer advancers than decliners. So again, my humble opinion, most of those indice gains are being driven by the Magnificent Seven. Percent of decliners was relatively small. Thought this was pretty interesting, the inflow in the NASDAQ and NYSE. So we saw a strong inflow into the NASDAQ early in the day on Friday. Then that inflow trailed off and actually became an outflow, a negative flow going forward in the day, even though, again, we saw the NASDAQ index continue to go up. NYSE, steady increase, steady inflow in on Friday. So again, thought that was interesting, a surge in inflow and then trailing off, and actually probably some profit taking, some outflow towards the end of Friday. Another quick reminder, you can also see the very near-term earnings calendar in the calendar section in the market screen in Webull, so you can see who's got earnings coming up in the very near term. Keep an eye on that. They've got the estimates, etc. So again, a great place to watch the near-term earnings. Okay, let's look at the best performing industries for the week. So we see semiconductors, metals and mining pretty positive. Computers, there's a meme stock, costs. Automotive parts, Zap. I think that might be another meme stock. Coal positive, software somewhat. Food and drug mostly negative. Water utilities positive. Banking it's mostly positive, slightly. FinTech slightly positive. Retail split. Communications, utilities mostly negative, and residential REITs mostly positive. Okay, ETFs. So right now, Qs, TQQQ up on the Qs, up on the Dow. UDow is up on the Dow. Looks probably short on mid caps. Up on the Dow again. Qs positive. Still short on Bitcoin. So BITI is one of the ETFs short on Bitcoin. YCL is up on the yen. ULE, I think, is up on the euro. Short on the Russell. Short on small caps. Industrial's pretty negative. Healthcare positive. Financial's pretty negative. Energy negative. Real estate, communications, and utilities positive. Technology positive. Consumer defensive positive. Again, this is all from Friday. Basic materials somewhat split. Copper pretty strong. Other commodities, platinum and palladium, we'll see rebounded. Guessing that's a gold, zero coupon bonds. So let's look at the futures. Just a quick reminder, you can also now trade futures in Webull, and you can see the details of futures trading in Webull in our Discord. There's a link to that offer in our notes documents, and you can see that in our Discord. They may also still have this on that promotion page as well. So yeah, if you go to that promotions page, you can also get the details of futures trading in Webull. So if we look at the future screen in FinViz, and we see the Dow pretty flat. S&P, exuberant run up, new all-time high. NASDAQ, exuberant run up, all-time highs. Russell flat. The Nikkei, again, weakness in the yen's driving the Nikkei up. So Euro stocks pretty flat. There's still, some, they had a new election in the UK. They have a new prime minister in the UK. Still some controversy in the French election, I believe. DAX did recover some. See the VIX, again, not a whole lot of fear in the market. I think the actual VIX is just below 12.5. Futures are showing 13. Again, we saw oil test 85, got rejected, but we'll continue probably to see that test to 85. See if we can break that resistance at 85. If so, continue up. Otherwise, maybe a bounce down to 80. Just a note, I saw the track of that barrel hurricane. It looks like it's headed for the Houston area. I'm not sure how that may impact some of the refineries, natural gas and oil refineries in the Houston area, but watch for some potential impacts to oil, natural gas, gasoline refineries in the Gulf, particularly around the Houston area. Might be caused by barrel, might cause an increase in oil prices, gasoline prices, possibly natural gas, as well as I believe some of the LNG production is probably in that area. If anyone in the chat knows that, or in our Discord, if you have more information about the potential impact of the hurricane on fossil fuels, oil, natural gas, etc., I'd love your knowledge. Please share that in the Discord as well. So also, again, we saw that surge in gold. So gold broke briefly above 2,400. That's a kind of resistance point. And the next is the all-time high around 2450. I think it's 54. So we'll see if it can break 24, retest all-time high, or if it's going to reject off 24 and then trend back down. Similarly, with silver, broke above 31, broke above 3150, probably going to retest 32. We'll see if it retests its recent high or gets rejected from 32 and then bounces back down. So again, we'll talk about the ETFs in a second that you can short-term trade: gold, silver, oil, etc. Platinum, palladium. We see recoveries in platinum, palladium. Copper swinging back up. Corn looks like might have found a bottom. We talked about corn last week, looked at that. We're seeing if it would test its low. Soybeans, crazy run. Wheat looks like it found a bottom and bounced. Lumber bounced back up a little bit. Sugar. And then again, we see that recovery in bond prices. We saw that retracement in bond yields, mostly based on the employment data that we saw on Wednesday and Friday. So we'll see if that continues up to the recent highs. very possible until we get possibly the inflation data later next week. Again, dollar weakened on that data, down below 105, gave some strength. British pound strengthened based on that and their elections, but the yen's still very weak, although it did hit a bottom. It hit 40-year low and got a little bit of a bounce, possibly on weakness in DXY, or maybe some further intervention by the BOJ. So we'll see. Okay, I'm going to open up our ETFs Google Sheet. We'll again talk about and look at some of the ETFs you can use to trade some of these trade ideas. Again, once we identify a potential trade, long or short, we can find an ETF that we can trade that trade idea with using our ETFs Google Sheet. And again, you can gain 24/7 access to our ETFs Google Sheet, as well as our other Google Sheets like our dividend payers, our options, covered calls, etc., puts ROIC, all by joining our Patreon at the All Access or VIP level. So I don't have any changes to our ETFs this week. So if anybody in the chat has a particular ETF you want to look at, particular index, theme, topic, we could take a look at those. Let me grab a drink and we'll go through our ETFs real quickly. Okay, so again, here's our ETFs Google Sheet. Again, I don't know why, but a number of some of the Google Finance functions are not responding in several of our Google Sheets. I'm not sure if other people, if they're responding. So it seems to be somewhat intermittent. So we'll see that both today and tomorrow. But regardless, we can see support and resistance levels, bottoms and tops, etc. And at least some of them we can see the current prices. Again, I don't know why the Google Finance functions have been intermittent the past couple weeks. So again, we see Bitcoin is down some. We talked about the biotech, Lab U, Lab D not really going anywhere. Been keeping an eye on these cannabis ones, but they're still not really near their 52-week low. But again, watching, see if cannabis is going to come down, see if that becomes attractive. Watching Brazil. Brazil had a little bit of a rebound. China was down a little bit on Friday. Got coal. Talked about corn last week. Again, close to its 52-week low, but not a great risk reward. But again, if you want a short-term long corn, talking about copper rebounding. Talked about the euro. We saw ULE rebound in the euro. Again, you can trade short-term trade the FANG stocks, which is very close to the MAG 7 with FANG U, FANG D. We also, in our research tab, we have MAGS, which is a new ETF that we've done a previous video on, specifically on the Magnificent 7. So if you want a long Magnificent 7 with a ETF, you can see MAGS in our research sheet. Gold and silver. So we talked about, we saw that surge up in silver, so, or gold and silver. So we have a number of ETFs that you can long or short gold. So if you see that rollover, see a correction in gold, GDXD, we're currently still long GDXD. If you want a long gold, GDXU, get dividends on gold, GLDI, silver, AGQ long, CSL short. So we recently got out of our short position. We're not currently long or short in silver, but Again, you can trade that volatility long, AGQ, short ZSL, dividend payer SLVO. Talked about solar being down, so I've been looking at TAN, see if that looks attractive. Talked about sugar, broad technology, TECS and TECL. Again, you can watch oil and natural gas. Again, see if the hurricane has any impact. You can long with Gush or UCO, short with DRIP or SCO. That's oil. Natural gas is boil, long, cold, short, KOLD, short. Boil, cold, or UNG or UNL, long. So again, any trade idea that you come up with, or ETF, Google Sheets a great place to identify an ETF with whatever risk reward profile that you like, fits your needs, your trading style. We've been watching, and we'll talk about REMX tomorrow, rare earths. Trade the indices, talked about silver. We do have a number of single stock ETFs in our Google Sheets, so NVIDIA, Tesla, etc. And again, if you don't find it in the main ETF sheet, we have a number of additional ones in our research sheet. We've done several videos on how you can use ETFs, single stock ETFs, to trade various single stocks, long or short. Bonds, long, TLT, TMF, short, TMV or TBT. Watching uranium again. We were watching wheat. It had a recovery. And again, we're currently long the yen with YCL. You can trade yen short with YCS or long with YCL or FXY. Water we talked about with PHO. So again, I hope all those help. If anyone has additional ETFs you'd like us to take a look at, please put a comment under the videos or in our Discord if you'd like us to do research on any further ETFs. And again, we have a whole playlist of all of our previous analysis of various ETFs on our BeachBum trading channel. Okay, so if anyone else in the chat has a particular ETF you want to look at, I'll try to keep an eye on. Let me grab a quick drink, and then let's talk about our topic for this week, which is how you can declare your financial independence. Again, let me grab a drink, and we'll discuss how you can declare your financial independence. Okay, in honor of Independence Day, the 4th of July, I thought it'd be a good opportunity to discuss the topic on how you can declare your financial independence. Again, in our humble opinion, trading is a great life skill that you can use to supplement or, again, achieve your financial independence. And again, I just wanted to go through some of our thoughts on how you can use trading to become financially independent. Again, this is all my opinions, my thoughts for your education and hopefully some entertainment purposes only. None of this is financial advice, and we're not financial advisors. And I would highly recommend you consult a financial advisor on the details of your plan on how you can declare your financial independence. So again, in my humble opinion, learning to trade is a great step towards your financial independence. As you can make money trading, using any kind of different style, personality, etc., from anywhere in the world where you have an internet connection. So again, I think step one is just learning to trade, and this takes time, learning what style is best for you. The goal of learning to trade is learning to become a consistently profitable trader. So again, once you learn what trading styles work for you, what you can make money trading, how you can make a profit, then the goal is to become consistently profitable. You probably will take some losses, learn some lessons learned over this course, and learning what trading style works best for you. So then you want to, again, the goal of becoming consistently profitable. Now, once you become a consistently profitable trader and you have, the data, as you'll see, recommend that you keep, profit and loss records of all of your trades, a trade log. Some people recommend, again, to show yourself that you're consistently profitable. You need some records of your trade showing your profits and your losses. Once you become a profitable trader, then you can start scaling up your profitable trading until your average profits consistently exceed your expenses. So again, you need records of your profit and loss so you know what types of trades are the best for you, what can you be consistently profitable at. And then again, once your average profits over some period of time exceed your expenses, you can scale that up, increase your profits until your profits exceed your expenses. Obviously, then you need to know what your expenses are. What are your expenses for the month, for the year, etc., so that you know that your trading profits are exceeding your needs, your income needs for the month, the year. Again, I recommend that you have a safety net. Exactly what that means and the size and the type of safety net you need is going to differ with people. Some people are only going to be comfortable, with a savings account. Some people may be comfortable, having credit cards in the case of an emergency or again a drawdown. So in part of calculating your expenses, your income needs, you need to account for drawdowns when market conditions are not conducive to your profitable trading styles. So different trading styles, may work better or worse in different market conditions. We always say you can make money trading in any market condition, so that may not be the same for different people. We can make money in bear markets, bull markets, etc. Sometimes very choppy, range-bound markets are not terribly conducive to our style of swing trading. So, that might be a case where, we're going to be withdrawing more money than we're making because the market conditions are not conducive to our particular trading style. So it's important to account for that, where you're going to be withdrawing more than you're profiting due to market conditions, and you don't want to be in a position where you have to liquidate a position um, for your income to pay the bills when market conditions are not conducive to your trading. Also, we recommend additional income streams to smooth out your income or cash flow when, again, market conditions are not conducive to your trading style. This can be a job, a full-time job, a part-time job, side gigs. This could be rental incomes. This could be other passive income streams, which, again, I prefer. I like to be able to make money trading or make money while I'm on the beach. So, again, you want to have supplements to your trading profits to smooth out your income needs, your cash flow. Again, so you don't have to liquidate a position to pay the bills, particularly when market conditions are not conducive. So having other income streams is a great thing to peace of mind lower your anxiety, lower your stress, smooth out your income and your cash flow. Dividends can help. Dividend stocks can help in that. And again, once, in my humble opinion, once you have and can show consistent profitable trading where your average profits exceed your expenses, then you can achieve your financial independence. Um, Again, different people will recommend different sizes and types of safety net when exactly you can declare your financial independence. Based on all of this, it's going to be a personal thing. Again, a financial advisor can help you, but again, it's all going to be personal, based on what your needs, your income needs are, what supplemental income streams you have, if it's Social Security, pensions, again, jobs, part-time, full-time, side gigs, etc., passive income streams. All of that will factor into, when you're comfortable declaring your financial independence. Again, one of the reasons I wanted to, talk about this is, my humble opinion, once you're financially independent, then you can do whatever you want. If you want to go back to school, get further degrees, travel, again, you can make money trading, traveling from anywhere in the world. If you have a phone or an internet connection and a laptop, you can make money trading. And if you're a consistently profitable trader, uh, making more than you're spending, then you're financially independent. And again, then you can do whatever you want, whenever you want, from wherever you want. So I hope that you like this topic. Please let us know what you think of these ideas for becoming and declaring your financial independence. Please let us know comments, other ideas you have for achieving financial independence in the comments to this video in our Discord, etc. Um, some additional resources is you've probably heard the term FIRE, and you'll see that referenced on our thumbnail. F.I.R.E. stands for Financial Independence Retire Early. So again, if you're currently below retirement age and you're whatever age and you want to retire early, once you've achieved your financial independence, you can retire anytime you want, right? Um, and that's the whole thing behind the FIRE movement. So they do have a Facebook group that I'm a member of. Haven't participated a lot recently in there, but you can find all kinds of other discussions and people talking about the FIRE movement there, and find additional resources specifically related to the FIRE movement in their Facebook group. And I have links in our notes to that Facebook group. If, again, other people have other references and resources related to achieving financial independence, the FIRE movement, etc., we'd love it if you'd share those in the comments to this video in our Discord, etc. So other topics we've been talking about related to making money trading, so related to achieving your financial independence. It's how you can make money trading in July of 2024, July in general, top performing, how the markets perform, best performing markets and sectors in July, also in the summer, how to trade the stock market, the summer stock market doldrums. Again, this week was, pretty low volatility. Got a lot of people traveling, so low volumes. So again, you can reference all those. Tomorrow, we'll also talk about dividend paying stocks and additional ways you can generate income trading. Again, where some of your trading styles may not be conducive to stock trading. We'll talk about options trading as well, dividend payers. So again, thank you all for participating in the chat. Again, let us know what you think of all of this, about how you can achieve your financial independence, etc., how you can make money trading, and put it in the comments below. in our Discord. Again, our Discord's free to join. So we'll take all of this input, and tomorrow we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll also talk about using dividend payers and option strategies to also generate income. So again, we hope you'll all come back 10 a.m. on Sundays for part 2 of our weekly trading game plan for July 7th through July 12th. We hope you like this content. Please smash the like button. Please share our content directly with your fellow traders and friends. Help us continue to build our BeachBum trading community. Please let us know what we can do to improve our weekly trading game plans, any of our tools, resources, our community to help add more value for all of our fellow BeachBum traders. So again, let us know what we can do to help you make money trading, help you declare and achieve your financial independence. Thank you again to everyone in the chat for your participation and support, everyone that's watching after the fact, and we hope to again see you all tomorrow, 10 a.m. Sundays for part 2. Thank you and have a great day.